Hello Pioneers, and welcome back to another video of the Daily Candle Close News. And we'll be jumping straight into some technical analysis and looking at some markets in this video. So straight into the XRP price charts and not holding anything back, getting straight to it. You know, it's the same story. We just keep returning to these low wicks back to around this close to 51 cent level for XRP. And we follow gematria and numerology here on the Daily Candle Close News, and we know that's important because XRP gives us that 15, the mirror of 51. So this year we're in the year of the tiger, giving us that 15 as well. So very symbolic. Today is 5/9, May 5th, and we're seeing these lows bringing us down close to around that 51 cent price again, dating back to our June and July lows last year. So very important. We're continuing to feel these wicks of recent January lows that came in around the 21st and 22nd for XRP as well. So this is bringing us ultimately back down to our 888 level of our Fibonacci extension and retracement. And you get this by placing a fib in bearish pool by clicking first on the low and then going back up to the high, in case you were unfamiliar with how to get this bearish retrace pool for your Fibonacci, where you see the 888 level down here, where we're hanging out around. And so we're continuing to set higher lows, very close to toeing the line though. We need to hold this 54, 55 cents. We know yesterday when we zoom back in and we take a look at yesterday, we fell to 58 cents on 5/8 Mother's Day. We hit 58 cents, a high of 58 cents, and then finally fell to a low of 55. That 55 we've been going over in our work here on the Daily Candle Close News. And if you're interested in these number connections, follow some of the work. This is just a short, quick technical analysis video for you all. We hit 57 cents for XRP on 5/7. So we're seeing some very powerful number and day connections to XRP's price for quite some time that we explain here on the Daily Candle Close News, ultimately bringing us down to this low of 54 cents right now on 5/9. So we'll continue to hang out around this 888 level. Now we're lower than the wicks of January, just retesting these June, July lows, something that we'll continue to pay attention to for XRP. So we hit 58 cents yesterday on 5/8 Mother's Day. That's all tying us back into, again, the 58 connection we get in XRP yesterday, 5/8 on Mother's Day. When we type out Mother's Day 2022, let's get this correct. We get the 58 in reverse full reduction. And tomorrow is a time period that starts Mercury retrograde, giving us another 58 connection in Chaldean. So something very important that we're paying attention to for this time period right now for XRP, the number one holding here on the Daily Candle Close News. We've seen a lot of altcoins break below structure, typically considering it to be called a spring. And why is this right here? Okay. And that's typically called a spring, and that's something we could possibly be seeing take place here in the XRP price chart. And I've got this accumulation level set right here to accumulate more XRP at the 41 cent level. So something we could possibly see take place if we were to continue to break down is to fall down to this 41 cent area and be bought back up. That's bringing us close to this, and we can even fall down to this 1618 of the bearish retrace pool down there at around 37. But we're going to be conservative here on the Daily Candle Close News, and remember these clusters of volume and trading ranges down here as well for potential support to be held in. So that 41 is the mirror of 14 we get when we type out XRP in reverse full reduction. So something I'm going to pay attention to is a possible accumulation for packing the bags before a potential increase in trend reversal. We know the RSI, when we look at XRP right now, it's in extremely oversold and underbought territories. So we know we don't hang out in these areas very long, and we're setting a higher low in structure right now with a potential W if we were to continue to see this RSI break towards the upside. So that's a potential W pattern, a very bullish pattern here to pay attention to. This could be a inverse left shoulder head forming that leads into a right shoulder, and that's a very bullish pattern as well. But we'll continue to see what happens. We need to flip this signal line again of the RSI before we can continue to see price increase or signal increase on the RSI towards the upside. The MACD is still bearish right now. We're looking to see a bullish flip on the MACD and that signal line right there to form bullish histograms. So we'll go ahead and delete this real quick and get continued on here. Definitely not telling anyone to put any fresh money in the market right now. We want to wait till the Shemitah is over, but this is something that I've accumulated for multiple years. So I dollar cost average into this asset when we see these lows and these certain areas, very symbolic price targets for XRP. Let's continue to talk more about this V-shaped recovery that we could possibly see coming in the cards. When we take a look at Algorand, we see that it has set that spring in structure by setting a lower low than our previous lows that we set back in June, July, May of last year, right after our April highs in this asset. So very similar to all the other assets we talk about here, having April highs, some had September highs. But we see another rally in September for Algorand that took it to a new all-time high, so something very important. But we see this very important V-shaped recovery right down here. That's something to take note of. That's bringing some more volume in the markets as well. If we were to take a look at the volume, we could see that, volume has started to increase in this asset, and that's very important, bringing in this bullish momentum towards the upside after we fell down past this 236. So this V-shaped recovery right here, and that's a sign that this is more like a spring, and that's a very structural thing right here when viewing these price charts. When we go back to our high in April, we saw our top with our double top. That's about a month plus, more than 2-3 weeks, so we know that's a clear double top that led to this downtrend, A, B, C correction that brought us down to our May lows around this eclipse period. Sell in May, walk away. Very traditional that we see. So we saw then continuation into a new all-time high. Very bullish momentum, volume indicator moment right here. Into the same thing, a very climax moment. Return back to the golden pocket, not being able to hold it, and a breakdown to the 236. We gravitate down to the bottom. And then when we got rejected from the 236, we ended up breaking back down and going below it, breaking structure and showing a washout. But clearly we see the buyers coming back in to accumulate this asset. So seeing it come back and retesting this 236 level right now at 67 cents, and as long as we're able to hold this, we're actually accumulating more of Algorand right now and dollar cost averaging into this asset back at around 67 cents after we see this V bottom, very bullish momentum right here. We were unable to accumulate down here. We didn't catch that 56-cent level, but again, we might not catch the bottoms and we might not sell the tops. It's about being conservative and paying attention to the technical analysis. We see the fundamental breakout and V-bottom recovery. We see the volume and the support. As long as we can continue to hold this level, I'm okay with dollar cost averaging back into this asset for a potential increase, even if we do go to the golden pocket or the 0.5 and get rejected into a bounce. We can de-risk along the way. Not financial advice, but just sharing with you what we're looking at here on the daily candle close news. So how quick this is happening, this could be something as to a possible inverse head and shoulder. Our neckline would possibly be the 236. So any daily closes above this and multiple closes above this, we could possibly see this break back up towards the 702 in this golden pocket. So around $1.58, roughly, $1.45 will be conservative. That 144, that very symbolic number, we'll pay attention to that. That's the 618 of the Fibonacci extension retracement dating back to April. So hopefully this all makes sense. Essentially, when we're seeing the market break down, and especially how quickly we're seeing it get back up, a sign of strength. This shows me retail is probably fully washed out, and there's only sophisticated analysts and investors in this market. So with this 236 at around 65 cents, we need to pay attention to structures right here that will determine any movement back into a recovery and trend reversal into the golden pocket or 0.5 for a potential dead cat bounce. So let's move on, you guys. We'll talk about polka dot. Something else we've also started to recently dollar cost average into. That's really what this video is about, just showing you some things we've dollar cost averaged into and shared with you all recently, and some that we're starting to look at, like the Algorand chart we just went over. Polka dot's one I've shared with all my pioneers we've been accumulating. So when we look at this, we see we got a clear rejection from our 236 at around $19. Not surprising. We know how powerful this 19 is. We're right now in the 19th week of the year, so very surprising that added confluence, or just very symbolic to me being able to talk about this right now. We're retesting this low of the 236 at around $10, so we could possibly see polka dot hit $10 to $8 in the near distant future, so possibly have some possible accumulation periods bought, and maybe come all the way down to about $7.50, that $7, $8.10 range. Something around there is where we're targeting for another possible accumulation range. But right now, again, we're dollar cost averaging into this downtrend, okay? So, we want to put a horizontal ray right here at around $7.27, holding the low of January 2021, and a potential, we'll do $8.10, potential target buy-ins right here for dollar cost averaging and accumulation. And we can hit this 9 as well. Something right here below our previous structure. If we were to zoom in, pull this up, you see we're falling below the 236. So we've got some potential targets we could see for, a spring in structure before getting bought right back up. Not financial advice. Something we're looking at, just dollar cost averaging into this asset with. So the way this broke out a little bit sluggish and, it failed to hold support right here, fell down, I could potentially see the same thing happening right here before continuing up into this Mercury in retrograde time period. So, we know polka dot, it hit a $56 high. Not surprising because, well, when you type out polka dot, you're getting the 56, I do believe, if I can remember correct. Yeah, you get the 56. So not surprising, you guys. Use numerology, gematria, astrology, and things to understand this market. So not surprising. Dot gives us 15, probably. Yep, that 15 and 51 is huge when it comes to finances. So not surprising. We're currently seeing dot below $15. So a great accumulation period under anything under 15, I do believe. So just looking at this and just more potential V-bottom spring structures, Wyckoff accumulation is a great way to analyze this market. So not too much to say about the similarity between DOT and Algorand, Let's talk about Chainlink, all the link marines out there. So very, very similar, the same thing. We have a fib pulled from last year of April and May, our highs, down to the 236. Boom, we got rejection from the 618, our golden pocket. Oh, sorry. So not surprising to see this. When we zoom out, we see that we got rejection from the 618. Our golden pocket is the 618 to the 786. This is the 702 at around $42. So we know how important that 42 number is. We're in the 42nd year of the Georgia Guidestones, the 42nd year anniversary of the Georgia Guidestones. That 42 ties us to Saturn, Father Time. So very important to pay attention to that $42 chain link level if we were to get back to that. A very heated level right here. A lot could happen at that level. We could either get rejection or continue up to the 1618. So that would put us at around an $81 chain link. So very important. When we type out link, what do we get? We get the 46, the 11. Let's type out chain link. Let's see what we get. That 45, that 54, that connection to Bitcoin, that 81, we could potentially see a 1618 level chain link at around that $81. So not surprising that we get that. So accumulation at anything under $10 right now, retesting previous December 13th lows back here at around this time period for, the 2020 period. Very, very surprising. It's been a long time, and since we've been at these levels, we're down roughly 81%. Chain link equals 81, you guys. So I'm accumulating at this level right here. Dollar cost averaging back into this asset. We first got into chain link at $3 to $5. So we've been on a long run with chain link, and we've held this asset for several years. We're gracious to get this opportunity in. We de-risked at around that 45 level for chain link right there at around that 786 last year. So it's pretty obvious to pay attention to chain link and get that 45 and to know why we de-risked there. So take note of that. It's very important. This is again a potential V-bottom recovery heading into Mercury in retrograde. We know it's typically either a sideways and boring leading to a pump period or just a straight out pump for Mercury in retrograde. So very important to pay attention to this, you guys. This is a sign that chain link has done its full move, and this could get very bullish in the near distant future. Not financial advice, just looking into chain link as a potential possibility to dollar cost average into and accumulate. So we'll go ahead and continue on to XLM. All right, same thing, you guys. We've been dollar cost averaging into this asset. We're looking to possibly get some more 14 to 10 cent XLM. We dollar cost averaged into this asset all the way up until 7 cents, and we saw the breakout in 2020. Before we started to de-risk in these almost 80 cent level. We de-risked at 72 cents for XLM back in May of last year. So we were able to wait, and now we're accumulating again. Not financial advice, you guys, but we're potentially setting this V-bottom spring in structure by falling below our June and July lows. So we could possibly see a W pattern breakout for XLM in the near distant future if we were to continue to fall down, get bought up, come back, retest, break out. We could possibly see this as our neckline right here. And then if we were to make that measured move, say, we fall down to this 14 cent level and then bring it back up, we're possibly able to see a breakout back up towards that 27 cent level for XLM. We're in the year of Jupiter. Oh, I always do that. New keyboard, still getting used to it. giving us that 27. XLM is highly tied to XRP, and Ripple giving us that 27. You know, we know if Ripple moves and XRP moves, XLM's going to move. It's its little brother, little sister. But when we type out XLM, it's giving us that 14. So we might be able to possibly accumulate at this 14 level. Stellar XLM giving us that 33, that 134. We getting Ripple XRP. So highly tied to XRP right here, but doesn't give us that 27. I'm not seeing a 27 connection there, but we know XLM is highly tied to Ripple and XRP. So a potential breakout to 27 cent after this, whatever we're doing here. Is this a spring, or are we just going to continue to fall down to the downside? Nothing can go straight down, and we've been going straight down for about 4 months, you guys, getting rejected from the 0.5, the 382, etc. So ultimately seeing this as a potential spring opportunity for a lot of these cryptos. I'm going to leave this video here, and I hope you enjoyed it. Take care and God bless. And if you're interested in some more work that we do here on the Daily Candle Close News, then feel free to follow. But pioneers rise and build your legacy, build your fortress.